We are going to make sure that obviously we make it as interesting and down to earth as it needs to be so that the takeaways from this panel are really valuable to you. We will be talking about unlocking capital in Latin America. The panel earlier on, we're talking about unlocking capital in the US, hopefully a lot going to Latin America and then coming back and forth and reinvesting. So I'm going to let my fellow colleagues in the panel to introduce themselves. Then I will be taking the microphone back to talk about what the content will be of this panel. I will be making sure that we have enough time at the end for your questions. I think it's important that the audience participates and not only spend the time sitting down watching their WhatsApp, as we normally do when we're audience. So I'm at fault of that as well. Sometimes we sort of, look back at our phones for no real reason, but because we used to. We automated to look at the phone to see if there is something interesting. I also know that there was lunch, and it was a heavy lunch for some of you that love the food. I love the Puerto Rican food. And I know you already gone through a session, so this session should be good enough to keep you awake. And then at the end, if you want to exchange contacts with my fellow panelists, they are all more than happy to do it. Contacts, no checks yet, okay? So this is also a panel where there is loads of money, and I expect them to talk about that. So I will go from the end with Ali. If please, you can go ahead and introduce yourself. Use the microphone, and 3 minutes or less, as you wish.
All right, I usually like to keep it shorter than that, but I'm Ali Jamal. I run a firm called First Check Ventures. We started as an angel syndicate. We have more than 4,000 LPs, have deployed more than $30 million across 120 investments in the last 4 years, mainly investing in Latin America. The name is First Check because we are literally the first check at about 90% of our investments coming in pre-seed or even angel rounds. I think that's it. Agnostic sector-wise with a big emphasis on Latin America.
Thank you. Sarah?
Hi, I don't have any check, sorry. My name is Sarah Goldberg. I'm the executive director of URUCAP. URUCAP is an association from Uruguay in the South America that we associate all the VCs and angel investors that are working in our country. But they are not only from Uruguay, they are from Argentina, Chile, Paraguay, Brazil, and Uruguay, because in our country something very special are happening now. A lot of entrepreneurs and investors are coming to our country. We are a small country, I think maybe like Puerto Rico, and we are very attractive nowadays to the investors and for the entrepreneurs to live in our country, because we have a lot of things to offer. So here we are in the middle of these two worlds.
Thank you. Carlos, please.
Yes, thank you. Happy to be here. My name is Carlos Baradello. I am the co-founder and general partner of Alaja Capital. That was an adventure that we started in 2010. We were the first venture capital fund in the interior of Argentina. And I am originally from Córdoba, but I have been living overseas since I finished the university. So one day I received a call from a friend of mine who have just come from Israel. And in Israel, they have seen these venture funds that have the leverage of the government. So they came back with the idea to say, well, maybe we can form such a venture here, and we are going to get the leverage from the Córdoba, the province government. Well, you know the story of Argentina, and the government has a history of broken promises. The leverage never happened, but we did form the fund, and we decided to go ahead even without leverage. That was our first fund. Just a few weeks ago, we closed the third fund. So it has been a journey of learning, a pioneer really, and very painful to grow to where we are today. We are very proud of where we are today. So the first fund was our MVP, and it invested mostly locally. Then the second fund, we based it in Chile, and our third fund is now based in Delaware. We have expanded to all the Spanish-speaking Latin America. So today, Alaya has the presence in all the countries, the main countries of the region, except Brazil. We have many portfolio companies that do grow in the Brazilian market, but we don't have a local presence there. I'm sure there will be many questions. Happy to continue later.
Great, thank you. And then finally, I will introduce myself. My name is Israel Pons. I'm a GBAN board member. That's the Global Business Angel Network that is part of Gen Invest, which is a part of Global Entrepreneurship Network. There is a representative, which is I have the honor to do, from Latin America. Also somebody from the US, Linda Smith, who joined us here from the ACA Association. Somebody from Europe, somebody from Africa, and somebody from Asia. The GBAN has the purpose of helping create angel networks through certificating possible angel investors to be members of this, then to invite them to be part of GBAN and exchange better practices, deal flow, and also to look at what challenges are there for the early stage investment. So we have a closed session tomorrow in which we will make a big announcement, but we have invited any of you that represents any form of early stage investment to come and join us to that round table. You can speak to Alejandra over there at the end, and she will make sure that you receive an invite, because it's an invite session only. Great. So what we're going to talk about is, I'm going to put it to you into 5 different points so you can have a little bit of how the story is going to go with this panel. We're going to talk about the challenges of deploying capital that they have or they know that happens in Latin America, how they write the checks, what are the challenges to that. We will touch on that subject that is also something that we love to do in Latin America, which is the legal barriers, either for the investors and the VCs or angel investors, and the startups in each individual country or in the region as a whole, whether the money is set up in the US to be deployed in Latin America or is already deployed in Latin America and how it happens. We will then move on to co-investing challenges. We all want to co-invest, and the reason for that is to reduce the risk, but it's always a challenge to be able to do it. And also the next rounds of funding. You know, the startups have to grow. How do you keep investing? How do you do the next rounds? And obviously the valuation comes into place. And finally, but not least important, the famous grail, which is exits. Where they are, where can we find it? And it's not just that big door over there, but actually how do we get on multiples, right? So I'm going to go back, and now we go from this end to the other is, what are the challenges on deploying the capital that you now have, since you lead some of the venture capital, so you have faced before in the previous 2 funds that you have managed?
Well, you actually do surprisingly few investment compared to the amount of projects that they arrive to you. The best projects typically come through friends. And that's important because we were pioneers, and when we started in 2010, we didn't have friends. Nobody recognizes us. So you have to establish a brand name and to meet a lot of people in the industry. And eventually you get referrals and you get the opportunity to invest in things that otherwise you couldn't. But the truth being said, that our investment rate is a single-digit % compared to the amount of projects that come from all different sources. Now, the projects that come highly recommended to us by people that we have in very high esteem, they tend to be the projects that we review first, and we tend to review deeper. The other thing that we have now that we didn't is because we have a very large network of limited partners. We have limited partners in many industries, in many countries. I'm talking Spanish-speaking Latin and the US. And through them, we can say, what do you think of this market? What do you think of this opportunity? Is something coming fintech? We have people with very deep experience in that area. And we get that feedback, which we didn't have before. Having said all this, it's a marathon, it's a long journey. So let me pause here to hear from the other panel, and then we can add to.
I think that nowadays, like in the beginning, the most challenging thing that our associates has to see to go is that they first to do themselves the fundraising, to look where is the money to build their VC, no? Found the LPs that have the same values, the LPs that they want to do the same impact, they want to see that the things go right and well. And in the other hand is the deal flow of good entrepreneurs, of great startups that could be part of that portfolio, yes? And make that they can grow together, I think, no? And find the same values too. It's a way of trust and the VCs are in the middle of the LPs and in the middle of the startups, and trying to develop a great community around the VC. I think that they are the best or the most challenges that every VC have.
Yeah, that's right, because if you're a VC in Latin America, not only you have to compete with better returns, right? But also you have to find the best deals in an environment that is very challenging. If it is challenging in the US and developed markets, in emerging markets like Latin America, you do get to find that it's very difficult to do background checks. And that's why something that Carlos mentioned is that normally the best deals come referred by friends, by people that you know. Unlike the US, where you already have deals that come to you directly into platforms and others that are there ready to be checked out, because you have all the systems in place to check the company through the SEC, to check referrals, to go into platforms where you can check the person and pretty much the credit score before you actually meet them when they're going to pitch, right? But Ali, you're based in Puerto Rico. You are probably the most active angel investor in Latin America, operating from the Caribbean, and now since you have deployed so much in so many startups all around, you sort of have a good view of what are the challenges to deploy your investment, and how do you convince your investors to invest in your fund?
Yeah, so I think there's a big problem kind of in Latin America where most of the investors aren't like that, say they're venture capitalists, aren't actually venture capitalists. They're all kind of private equity or finance guys who have now started to do venture capital because it sounds cool. but they don't actually understand tech or how tech companies work. They don't want to take those risks on the founders. Most of them that I've met at least have gone to private schools. They come from wealthy families. They have these established networks. It's basically like old school boys clubs. And they want to invest in founders that come from those same networks. And so when they find somebody who's, Colombian and coming to Mexico, they don't trust them and they don't want to build them. I think it's true for a lot of the family offices as well. They're not comfortable taking these risks, right? And they want to see somebody else come in first. And so what I've actually found is the U.S. investors are more willing to take the risks in Latin America than the Latin American investors are. And it's kind of a surprising thing because why would a startup who already has money from U.S. investors then want to take Latin American money if they already have the U.S. investors signed off? And so I think, that's probably the biggest thing that I'm seeing is there's nobody here to actually write first checks. Angels, I think, have disappeared across the ecosystem. I think a lot of them got burned in the 2020, 2021, because everybody was writing checks if people were writing too many checks. And now, since everybody's disappeared, there's actually a lot of fantastic companies that aren't getting funded and everybody's scared. And so I feel like people need to figure out the right level of risk they're willing to take and realize that if you really want to get that 100x return, it's not going to come when everybody else is chasing it because then they're bidding up the price. And so if you really want to get something that's outstanding, you have to be willing to make that bet. And obviously you're going to lose and you're going to strike out on a lot of these bets, but the more you take, the more you can do, right? So I'm trying to do 20 or 30 investments at least every year, knowing that X% are going to fail, but that the ones that succeed are going to be so successful, right? One unicorn will give you a 5x return on your fund, right? If you do the math right. So that's kind of my goal on it.
And you have mentioned a very, very good point. Is one of those is investors. A lot of investors in Latin America tend to take too much time talking to the entrepreneur, too many meetings, and it's difficult culturally for us to say no, right, quickly, because we don't want to be seen as rude. And the Latin American culture is always welcome. It's always let's talk more, let's talk more, let's talk more. And actually, we should talk more and talk less and do more by saying no or yes to the deal. Or unfortunately, also what we have seen, which you have mentioned, is fake investors that have the money but they're not investing, but they are in the ecosystem and they're doing more damage than good. So you have these paradigms that exist in the ecosystem in Latin America that we got to shift. And that's without talking on the legal side when it comes to challenges of investing. And I will go again with you, Ali, because obviously you are based in Puerto Rico. You take a lot of your decisions from here, but you have investors from different regions and you had to set up your VC where, and then how do you invest in Colombia or in Chile or in Mexico?
Yeah, so I think, so my fund is set up in Delaware. I am typically only investing in companies that are registered in Delaware. They will operate everywhere else. But look, I want companies that are going to be coming, unicorns going 100x. Unfortunately, when you look at Latin America, there aren't that many firms that can actually write a check for a Series A or Series B. And the people that end up writing those checks for Series A's and Series B's hear about you from your earlier investors. So the faster you can get a U.S. investor into your seed or into your Series A, the easier it is for you to actually go and become a unicorn. And so if you are making that decision that this is the path that I want to go on a fast-growing, potentially IPO, get backed by Andreessen or Sequoia or whatever, then you need to go and play by the rules that those companies do. And those companies really only invest in U.S. Delaware C Corps. So, it might cost you an extra couple of grand to go set it up now, but versus the headache of trying to do a flip and the ability to start taking money from U.S. investors now, I think outweighs that cost. because every U.S. investor, right, who actually does this for a living is going to want to invest in a U.S. Delaware C. There are rules and regulations tax-wise that make it more beneficial. Their LPs are asking them to only invest in Delaware Cs. All of my LPs have been texting me and asking me like, hey, don't invest in, a Mexican entity. I don't want to deal with like random bullshit taxes that now I owe in Mexico because I got a distribution, right? Like, and so if you as a company have to make that decision about what you want to do and what you want to be. And if you want to play in that game of this is the path I'm going to take, then go for it, right? And if it's not the path you want to take, that is also totally fine, right? Like you can be a small business, you can, try to grow, but then don't go down the venture capital path.
Great, Sarah. What are the challenges that you as an association from your members, the funds that are with you, the family offices, so who come to you and say, what are the legal challenges that you have to sort out for them? Because obviously once you have an association, then they'll give you the job to sort the problems out,
Yes,
right?
Yes, but I think that Ali said and what Carlos said is very important because Carlos said our first fund was in Argentina, the second in Chile, the third in USA. And our funds are all in USA, or are in Delaware, LLC, and go on, and the startups too. So that's one thing. They have subsidiaries in Uruguay, but the bigger things and the big checks, the bigger checks, go to Delaware. So that's a thing. But we talk with the government, of course, and they need to trust, first of all, yes? And I think that Uruguay is offering now a stable system and the rules are clear, so that's a good thing. But if the startups, like Alice said, if the startups need the next check is not in Uruguay, it's not in Argentina, maybe in Brazil. The biggest check are in USA, so they have to be there. And the same thing is going on with the VC. So we need good rules to apply what the startups are doing. But the thing about the legal issues around the startup itself is in USA.
So Carlos, if I'm getting it right from you guys, is that the legal challenge is not so much there as if you are raising money as a startup or you're going to invest as a VC, your structure is recommended that you do it in the US.
Right.
And so you eliminate a lot of the legal stuff,
Yes.
The trusting issues, and you leave a company operating in Latin America to be like a shopfront or to be operating, then that's where they're making their money and the market is, of course, because we do want the startups to operate in Latin America.
Sure.
So how do you structure that?
We made a lot of mistakes during our pioneer work, but the setting up in Delaware and all the investment being in dollars is a mistake that we didn't make because the situation, if you follow the Argentinian politics and economic for the last 20 years, was highly unstable, and it had been not realistic to invest in pesos or to have the structure in Argentina. So from the beginning, everything was Delaware in dollar denomination. All our investors came in dollar accounts, and we made the investment in dollars. Now, the companies operate in many countries in Latin America, and the structure depends on each one of the individual countries. In some cases, it's as simple as cost centers, especially if you have a large development center, let's say in Argentina, but you are not particularly selling in Argentina, then with the structure that you have in Argentina is just a cost center where it burns so much, $100,000 a month, it has 50 engineers or whatever is the number, and operates. In some other countries, you have a fully incorporated subsidiary that depends on the holding, which likely is a Delaware company. So the problem, and by now there is enough cases that we can advise the portfolio companies that we are thinking of opening in Ecuador or in Lima or somewhere. And we said, okay, we know the company so-and-so, because one of the great values that we offer is the network effect between our founders, our entrepreneurs, or the portfolio companies. And that network became extraordinarily powerful. And we are constantly nurturing that network with hot tips that we hear. You know, when Silicon Valley Bank had a problem, all our portfolio companies were about the first to get the money out. And that was because we have the power of the network and the communication between all of the members.
I think that it is something that the majority of VCs, angel networks, try to do, which is create this community with their portfolios, and then add value to each other, whether it's through a sharing customers market or a tech platform, or even access to software engineers.
Yes.
Everything like that. I did catch a little bit, and I'm just, as you know, some of the questions, I like not to prepare my panel for some of the questions because then it's just too repetitive, right? So I heard something from somebody on the previous panel, and it put my the hairs on the back of my head up. It's like, I heard fintech industry is very exciting in all of Latin America. And my opinion on fintech is very different from what the initial fintech was there, that is the holy grail of all solutions to all financial access for the bottom of the pyramid in Latin America. If anything, I've seen more platforms about getting people into debt than actually financial education. It just reminds me of the famous microfinance companies that used to press and really hard on their market to pay the interest rates. And if you check some of these platforms and the interest rates that they charge just by handing over a simple Visa or MasterCard to the bottom of the pyramid is horrendous. So I don't think the solution is there, but that's my opinion. I'd like to ask you guys, obviously, what is the next frontier you think will be? Let's not talk about fintech, and that a fintech will evolve into the solution for every other vertical industry in Latin America, because that will be of somebody who's probably got about 3 or 4 investments in fintech that's trying to locate the portfolio somewhere. Where do you think is the next frontier for Latin America?
Yeah, sure. I want to make a comment about fintech, because then I want to answer the question. The interesting part of fintech that happened in the 2018, 19, and so forth, is that they were offering a solution for non-consumption. And that is the interesting part. They have identified, they were not competing with Citigroup, where they don't have a chance if you compete with JP Morgan and so forth. They went into a blue ocean where there were non-consumption. People were unbanked, and they didn't have any of the financial services that they were offering. So where I see the opportunity is where the disruption have not happened, and therefore democratization have not happened, and therefore you are competing with non-consumption. That's a wonderful competitor, because people don't have access. So I wrote it a number of years back, what are the 5 industries that they have not been disrupted yet? And if you read my blog, probably you already know them. And these are the 5 oldest professions, and it's not what you're thinking. The 5 oldest professions are education, health, legal, government, and religion. These 5 industries, which are multi-billion, in fact, they're trillion-dollar industries globally, they have not suffered disruption. Why? Because they're in the incumbent. And if you're the incumbent, you're going to do everything possible not to be disrupted because you're having a very good life. And these are the 5 industries that I watch very closely because the 5 need healthcare, the 5 need, because there is no consumption, there is a growing population, and therefore they need education, need healthcare, need legal service, and so forth. So those are the 5 areas that I constantly look.
Thank you, Carlos. Ali?
I mean, I do think fintech is going to be a huge part of the future. I think we have a large part of the population, especially in Latin America, who don't have access to capital, who don't have access to debt. And I know debt sounds like a bad word, but like if you look at the U.S., most Americans, their net worth is tied into their house, and that's been their biggest source of net worth, and that's usually because of the fact they took on debt. I think in Latin America, there's a lack of trust in the consumer and in debt because we don't have data. And so I think finding ways to get data that we can then trust the consumer, that we can then give them access to debt so they can borrow against their future and build towards the future they want to build, I think is really exciting. And I think the other thing that excites me is then how giving people that access to capital will empower them against the people that are currently established in power. I think, I kind of mentioned this earlier, I feel like a lot of countries are run by oligarchies, and those people and those families have been in charge for several hundred years, and they really have not adapted or changed and are out of touch with what everyday people want. And so I feel like anytime you have a David versus Goliath situation, and you can empower that David, I think it's a really great opportunity. And I think empowering that David is by giving financial access.
So, Sarah, one of the regular talks that I hear in Latin America, especially when I go to events like this, similar, where you end up having some angel networks or VCs that get together and everybody talks about co-investing, right? Cross-border, cross-region, co-investing on deals. I've been hearing it from before the COVID season, and it's not happening. I mean, I still see that I see more deals being co-invested with funds in the US or with angel high net worth individuals in the US that want to dip their hand into Latin America than actually happening between investors in Latin America. What do you think? Why is that?
I think maybe that is changing because, for example, all the years there are 12 associations like URUCAP in all the region. Uruguay, Argentina, Brazil, Bolivia, Peru, Chile, and go on. And this is the third or fourth, I don't know, year that we do a week, and co-investment week, yes? And a lot of startups that were invested or are investing now by one or more of our associates present what they are doing and looking for funds from other VCs. And our VCs think that, okay, if this VC already invest in them and they saw something, so I want to go there too. So I think that this is changing. And for example, in Uruguay, in URUCAP, we do things very similar because, for example, all the demo days and pitch night or things like that, you used to do it with startups that are with open looking for funds, but they already have funds from another associate of Eurocap. So the other investors trust and want to invest because another that they know is doing that or did it. I think really, maybe I am repetitive, is a question of trust and in belief, and they have to obviously have that data, they need to have impact and show results, but you have to think and say, I'm going to go there. So I think that it's changing really.
Great, that's good to hear. And like Ali said, if the data was available, you know, and if you look at a startup and you see who the investors are, and then it will be more interesting to do it, you know, and having a database of the startups that have been invested, whether by one angel investor, an angel network, a VC, I think that will flow quicker. Because all you need to do is make a phone call to the investor that probably you know by somebody who's recommended you, and say, you know, that startup is still racing.
It's part of the due diligence. It's part of the due diligence.
It is, and I think the challenge is then that, Carlos, is, so if I'm in Sausalito and I want to have the deal flow and see what is happening in Latin America, and these 5 very interesting industries that you mentioned as target to probably start investing, you want to know who else is going with you, because one of the main objectives of any investor is to reduce the risk of their investment, and you do it by inviting others to invest, right? If you go alone, you know, you'll go so further. If you go together, you go a lot further away, because obviously somebody like Ali will make sure that that startup that you invested in then gets connected to the US and others. The challenge then, if you spend a lot of time in the US to get connected with other investors in Latin America, what is it?
Well, actually, I am the only general partner who sits outside Latin America. In fact, the other 4 co-founders are all based in the region. I think the interest that I have is, A, I know the region quite well, but second, I can connect with opportunities in the United States, in particularly in Silicon Valley. There was one investment that we did in a Silicon Valley company that I led, was in a company that monitored the health and the growth of the salmon for fish farming, a particular salmon. And Chile is the second producer after Norway. So clearly, for this company, Latin America was the second priority after Norway. And they were looking a co-investor from the region. And that became a case where we were co-investing with NEA and others, premier firms, because we brought something unique to the table. So the co-investment opportunities that happen in the region, obviously they're handled by my other partners who are in touch in more daily basis.
So, then let's look back into where the money comes from. How, in your experience, the 3 of you, how difficult is it to then bring the capital, whether it's local from Latin America or from other regions, that you're going to need to deploy in Latin America? What tricks in your book you use, Ali, to convince your LPs, your investors, to believe in Latin America?
I don't think I'm really that good at it. I usually just tell people, like, most of my LPs don't have a Latin American strategy. They have an Ali Jamal strategy. And I just show them the track record, right? Like, I don't necessarily, the fund is focused on Latin America because that's where I think there's the biggest gap, right? Latin America is half the size of China population-wise, same GDP per capita, but only 2% of the VC dollars. So there's this huge opportunity. We talked about the nearshoring into Mexico. We're talking like there's all these things that are happening, and people need to be there to support it. And basically, I am running an angel type fund where we're coming in and writing checks very early into these startups. Some of these things are going to fail, but if we make enough early bets, it'll pay off. And here's what the numbers look like. And it really is about finding somebody who, you have confidence in, can make enough investments. And I keep on calling it bets. I should probably say investments. But that is going to be making enough investments that you're going to be safe, right? Like there's a law of large numbers here. And if you make, 50, 60 investments in a fund, in a portfolio, then chances are you're going to at least get 3, 4x or do whatever the market's doing in these places. And ideally, you're above market investor and you're going to get better returns than that. And so that's usually kind of how I play it off. I find that a lot of the Latin American and family offices and things like that I talk to are pretty conservative and don't want to invest more in Latin America or have a Latin American strategy. And so it does end up being finding people from the diaspora that are now in the U.S. that maybe have confidence in this region, or again, maybe it's people that believe in me and believe the strategy, right? And there are larger institutions that will come in, but I feel like they usually have a specific agenda of where you need to invest or how you need to invest, and I don't want to personally play by those rules, so I would rather have a smaller fund that does 10x than have a bigger fund that does 3x because I followed some bullshit things that I didn't care about. So,
yeah, very well said, Ali. Sarah, you have one of your challenges. Obviously, is that once you become an association and you are the director or you lead it, is that your members, which are the funds, come to you to say, "Are you inviting future LPs?" Because a fund is always got the pressure of having to raise the next fund. And because now they belong to your association and said, okay, well, we pay your membership, so what are you doing to invite more high net worth individuals? And normally, especially, even in Mexico, the industry is so small, the family offices or funds that invest into other funds, that you pretty quick run out of new people to invite to your events. Where do you look for them?
Well, that's a big challenge. We have a lot of family office, yes. That's the first place that they go to look for funds, but everyone go there, so they have a certain kind of limit, and we always look in USA, but now we are open our eyes and looking in Europe, but Europe is looking VCs in Asia and Africa, so it's a big challenge. In the associations, every year we made another event that is the VC Latam Summit that is based in Miami. This year was the 4th edition. And the main activity, of course, networking, you go and see all the friends and VCs, but the big event is a day of speed dating. Speed dating between who? The GPs and the LPs. Yes? I don't know if big checks are happen there, but we try to bring together LPs from all Latam, yes, family, big companies, or like that. USA, and like I said, Europe, especially Spain. Spain is looking to invest in Latam a lot. A few from UK, and that's all, I think.
Great, thank you. And Carlos?
Governments, sorry.
Governments.
Governments too.
Deploying
yes.
money into
Yes,
Funds.
yes, funds of funds,
Yeah.
lot of governments.
Right.
Countries have this kind of programs. Peru, Chile, Uruguay, we are
Yeah.
looking,
Yeah.
but governments too.
Great. And Carlos, you being from Argentina, or based yourself there a few years, and now you have the relationship with the Southern Hemisphere. And we always talk about coming to the U.S., looking, for money for the next rounds, going to Europe and doing it. And something that happened in Mexico in the past, let's say, 3 years, is we starting to see quite a number of investors. I did a VC dinner event with VC funds from Eastern Europe and from high net worth individuals that escaped Russia. They didn't like their president for whatever reason, but they got their own capital. Not all of us like all the presidents around the world, but I think that's people see to distribute their portfolios. So we see some of this. I have a very close relationship with Africa. I have set up a group of angel investors, mentors there. But I'll see that these emerging markets in the Southern Hemisphere do have a lot of family offices, do have a lot of similarities in economy, but also in risk taking. Why isn't happening that in the Southern Hemisphere? I have a very close relationship to Chile as well and to Argentina. Yeah. Work with a lot of people there in Peru as well. But they look more obviously towards the US for funding, like you said, come and do an event in New York or Miami or somewhere, rather than in the Southern Hemisphere.
First of all, the people who invest in a venture capital fund is looking for returns. And they already know that it's a very high risk business. When you overlay that to the Latin American risk, unless the person understands Latin America and understands the risk profile, I have not been successful to persuade somebody intellectually in Berlin or in New York, somebody who knows very little about the region, to make an investment in the region. And if I was able to persuade, because the person at some point believed in me and not because every day there is some bad news coming from somewhere in the region. And if you just read the headlines, that will say, why do I want to go there when I have so many opportunities? Because keep in mind, somebody who has money has many options where to put the money. So that's point number one. The point number two is, I'm old enough, and because we started in 2010, I would say that entrepreneurship in Latin America started in the new millennium, in the year 2000. In the year 2000, 2010, very little activity happened, maybe in Chile. Where I'm going with this, that if you count today how many VC funds are in Latin America, I haven't done the count, maybe you have, Sarah, the number, but let me guess, 100, right? They all started after 2010. The great majority, maybe 2013, 2015, do the math. It's 10 years ago or less, okay? Now, what everybody is looking for is the exits, because we all have reasonable returns on paper, but at some point you have to show the money, and the time is coming now. So we are under pressure to have a number of exits in quantity and quality that will justify this asset class. If we are not able to show a times X5 or X7 return, okay, the people have many options to get 5% a year and take zero risk. Forget the risk, the financial risk, but also the country risk, the region risk. So I think we are going into a critical phase for the venture capital industry in Latin America. If the exit happen in the quantity and quality needed, we are going to see a renewal. If not, we are going to continue in the VC winter, which is turning to be a Siberia that we have been facing in the last few quarters. Okay.
So let me get back to where are the similarities between Latin America and other regions, Africa, Asia, and where we have seen in India a huge explosion of angel networks, VC, great number of exits happening. There is a huge angel association led by a dear friend, Tommy Davis, in Africa with the support of the European Business Angel Association. And we can see that they're deploying the capital very quickly, and they're doing it with all the barriers that happen in Africa, with more than 12 different languages, and also with the geopolitical issues that happen in Latin America. We might be left behind in this Siberian winter that you have mentioned. What is it that we can do as investors? Now let's see forward to 2035. What needs to happen in Latin America so this capital, this VC money that can be anywhere where it might be, so that we can dress it up better, and we can say the returns or the exits can happen. One of the challenges being that, Ali said, is lack of data. So how do you show it? What are the recommendations? And then I'll give you 2 minutes on that, because I want to keep the last 5 minutes for questions. If anybody has a question, please raise your hand. And then after these comments, we'll go straight to you. Anybody, any of you, take the mic.
Okay, I think that we need to improve some things like education. I think that this industry has to grow up. Yes, people don't know, governments don't know what is VC. And banks believe that the VC, they are fighting for the same deals, and that's not true. So I think that the VC industry has a big challenge to say, here we are, this is what we do, this is what we can put it on the table and make that all the economy of the region grow. So I think that's a big job that we have. And think together, because we think Argentina here, Brazil here, we are a big region, and I don't know, a lot of people, millions of people, and think together. I think that is, I know that the economy are different, the law are different, but we need to think in one region. So the impact is bigger, no?
Carlos?
I think what we need is great companies that have a global projection beyond Latin America. Because those companies are not being sold, the exits are not going to happen because they are being sold, but they are going to be bought. Because they are going to be such extraordinary companies that people want. To build those companies, we need great global-minded entrepreneurs. And being globally in Latin America doesn't mean you're in Chile and go to sell in Peru or go to Bolivia. Globally means I'm going to sell it in India, I'm going to sell it in Africa, I'm going to sell it in Eastern Europe, where they have a similar market dynamic. And that type of global mindset is not there. We still have a journey to go to really think in those terms. You know, how many entrepreneurs do you know that the co-founder went and set shop in Beijing or Shanghai or Taiwan? I don't know any. I mean, I'm very intellectually curious to know the South, the global South to the global South connection. That's an area that I have done some work. I have had a lot of conversation, but I don't see any traction. I can see entrepreneurs struggling to come and set shop in Silicon Valley. And I'm not talking about the expense. I'm talking from the cultural adjustment, the fact that they don't have el partido el sábado, or they don't have the barbecue, the friends, and so forth. Say, come on, if you want to be here, you have to play by this rule. It's a different protocol. That is still, we have a part of the journey to do.
Very true, very true. Anything to add there, Ali?
Yeah, I mean, I think I'm kind of part of this, right? Like I was in the US and then I went and worked in Asia, and then I've spent the last 5-6 years living in Latin America, working and investing in Latin America. And I went to go work for Rappi, right? That's why I moved to Colombia. And Rappi at the higher levels had tried to bring in top talent from overseas, whether it was US or Europe or Asia. Nubank does the same thing, but there are very few other big companies that embrace that idea of, we're not just a Latin American company, or not just a Colombian company or Mexican company. We're really going to be a global company. And it's not even about being a global company. It's about getting a global perspective. And I think something that also just has to do with the governments and the regulation and making it easier, right? Like we are now in a digital nomad world, where you have a lot of people that are traveling all over and learning and exploring and trying to find out problems. And so if countries make it easier for people to come and to explore and to take part, then I think they're going to get better development and better things happening, right? But if you can't open a bank account in Mexico without spending 3 months trying to open a bank account, then even if I'm a digital nomad in Mexico, what am I going to invest? And I can't buy and I can't build there. And so I'm going to go there for 2 months, and then I'm going to go somewhere else where they will let me open a bank account, right? And so I think there's a lot of things like that as a government, as investors, we kind of need to think about, how do we actually make these places more open? Because I think the exchange of ideas that happens from that is really where we get greatness.
Great. Let's quickly move to the first question from the audience. We'll go hand here at the front. We'll go a microphone, please, over here. Thank you. And we'll move around the room quite quickly. We can be brief on the answers as well.
Awesome. Great session. Congrats to all of you. I wish I've heard Ali's words maybe 7-10 years ago when I was trying to raise capital in LATAM. There's a lot of fake VCs, and I'm going to try to tie that up with the theme of this session of unlocking capital. You mentioned incumbents in different sectors. I think we have incumbents in the financial sector that impact risk, how much risk are these families or these groups are willing to take, which therefore impact your LPs and VCs in LATAM. So I love what you mentioned about going to the diaspora. I've seen that work many times, and I've seen that as a way to open the door for local investors in Mexico, where I've lived, here in Puerto Rico, where I've lived, and I've raised in both, in Argentina also, to see what VC looks like. And what Carlos was mentioning right now, that now it's a time to see if the distribution of these outcomes really pay off, and to see if we stay in that Siberia winter for a few more years or not. Carlos, is that something that you think it's because they didn't understood the risk of venture capital, or it's just that they're not, or they're just expecting market returns, and they would be willing to invest in other funds if your fund doesn't bring those returns?
Well, I think, first of all, in our case, but in the case of the industry in general in Latin America, they want to see the realization of the returns, not paper returns, because the paper returns look reasonably good because you have a higher and higher valuation through the different rounds, especially if you enter early enough, then you can show a reasonable return, a good return. I think the time is coming where the exit need to be realized. And those real dollar distribution flowing back. And I think that's becoming essential for the entire industry, including us. Okay?
And that, do you think that distribution will happen, or how would it happen in LATAM? Because in the U.S. we've used to M&As, we've used to IPOs, etc. In LATAM, we haven't seen that. There's a few LATAM companies that have done IPOs, but
I think
how does that look
I
like?
can answer that. I think the IPOs are rare, even in the United States. It doesn't, you don't have a huge volume. I think that the partnership with corporate is an area that we need to work really hard. And part of the work has to be done by the entrepreneur, but a fair chunk has to be done by us, the investors, to set those partnerships, those connections. I gave a speech about elephant and ants. How do you connect the ants with the elephants and they can thrive together? I think that should be the goal, because the truth, even in the United States, most of the exit is because of M&A, not because of IPO. And I think that's an area where we have to do and connect first with corporates in LATAM, but then with big corporations all over the world that have an interest of having a footprint in Latin America.
Thank you. Quick question here. Please be very brief with the answer.
Very brief. So I agree. Think globally, act locally. Ali, nobody in here has talked about investing in the Caribbean. Everybody says LATAM. I'm from Jamaica, so I care a lot about that. One offer, want to bring it to Jamaica and Barbados to see what's happening there in early stage space. And then so the question is, everything you guys have said applies to that region. Do you guys, any of you, invest in the Caribbean at all?
So I invest everywhere. One of my biggest investments is actually in Venezuela, of all places. I've made several investments here in Puerto Rico on the island. I think there was kind of an allusion to it yesterday or previously, right? Like, the problem with investing in the Caribbean is it's hard to find something that, and you even kind of talked about, right? Where it's hard to find something that's a global solution across the Caribbean because of the way the governments don't work. And so then I need to find something that's going to go from Jamaica to the U.S., which there's an argument there, but it's tough. Or that, and that I have to make, in my mind, the bet that this is the best team in the world to build this thing, and it's coming out of Jamaica, right? Which is possible, but like, what gives that team the edge or the unique insight? So I don't know if anybody here has seen Jonathan or Raincoat, right? But they're a Puerto Rican company where they are building parametric insurance. And the reason they're building that is because Hurricane Katrina wiped out his mother's house, and the insurance company would pay for it, blah, blah, blah. And he had a unique insight because of that into building parametric insurance, and they took that insight from Puerto Rico and brought it to the US. So if there's something like that, right, that I can believe that these people have a better understanding and can be a global solution, I'm more than happy to invest. But finding something that works just in Jamaica, it would really have to be some sort of crazy super app where everybody in Jamaica is going to use it 20 times a day in order to make it work.
Yeah, great, thank you. One last question and then we're done. And with that, I just say that I'm a member of Angel Network in Jamaica, and we're doing Rev Up. Yeah. Yeah. Great, yes.
Hi, I'll be brief. So we've seen that the VC model has largely failed on the African continent, and they've been using a lot of alternative sources of funding and different funding models. I'm interested to see, and one of the issues that we have a tendency of always wanting to replicate what happens in the US, where all the assets are in Latin America, all the assets in the Caribbean or in the African continent. Why is it that we cannot develop a model that is for Latin America rather than replicating a model that works in Silicon Valley? And to Carlos' point, we need to do a South-South collaboration and learning and knowledge sharing. Why is it that we're failing at that? What is your answer to that?
I think that it's not failing. It's, I don't know if it's a quiet mood to grow. There are the models that we know, and we try to do a model that adjusts to our reality, culture, and go on. But at the end of the way, the money is there, and we are, I don't know how to say in English.
¿En español?
Sí, tampoco. It's more asegurado. You have the guarantee that this work, and at the same time we do something apply to our region, but there are in parallel and always tick, 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 tick. So don't forget what we are, how we think, what we need. I think that's a big difference. We born locally, we try to resolve our problems. I understand and I compare what Carlos said, that born and resolve the problems of all the world, but first of all, try to resolve our problems, but trying to not keep in our country or in our province or in our region. So I think that maybe it's for there.
So one last question before we get kicked out and being told off. If you want to stand up, Camilo, yeah, and just there's a microphone there. Very quickly, please. Last question.
Thank you. Very quickly. Quick question. There's a lot of discussion about bootstrapping and financing. When do you expect, or what's your suggestion when to go to First Check or when to go to Alaya, and if the bootstrapping should be longer for validation, or are you more open to be in early stage?
So I personally like having the conversation as early as possible. I'm not going to invest probably that first time we talk, right? Like, I wouldn't do most things the first time I talk, right? Like, I wouldn't marry a girl the first time I talk to her either, right? Like, we need to build the relationship. And so the earlier I meet you, the more we can build, the more I kind of get an understanding of who you are. And then when it comes time for us to take the next step in our relationship, if I have this history of you and you've been able to deliver on what you said and you're able to deliver on what you promised, then I'm much more comfortable making that check, right? And so I don't want you to just come and spend 20 hours with me before, right? But you could do a check-in call, and if we vibe, right, then we'll have another check-in call, and maybe I'll give you, hey, I'd really like to see you have a live product before we talk next. And then if it takes you 3 years to get to a live product, right, then you got to tell me like why it took that long, right? And hey, okay, now you have a live product. I'd really love to see you have 50 customers, 100 customers, 1,000 customers, whatever number makes sense, right? And then understanding why each of these things is taking the time it's taking, how well you're doing, what your thought process is, that gets me more comfortable with like, are you gonna be able to take it from here to this $1 billion outcome, right? Because I need to be able to be convinced of that, because I need to go and take money from people and invest it based on the fact that I think you're gonna be a $1 billion company. I got to convince them that you're gonna be a $1 billion company.
Very briefly, you are not optimizing money, you are optimizing speed. Speed is the issue. So if you're in bootstrap too long, you're not optimizing time. If you're in bootstrap too short, well, you may not be credible. But at the end is the speed, it will make you successful, it will make me successful.
Thank you very much, everybody. Thank you very much, dear panelists.